What's going on, everybody? My name's Jose from deepdatainvesting.com, and today we'll be talking about operating profit margin. Now, really quick, if you haven't already, go to deepdatainvesting.com, where we share everything that we've been learning about investing in the stock market so that you don't have to waste your time going through dozens and hundreds of online resources. In the future, we'll be expanding to different tools and utilities that you as the investor can use to determine your next investment. So what is operating profit margin? Well, let's break this down a little, okay? So the operating profit is all the money that's left over from the gross profit after subtracting all the operating expenses. Now, operating expenses include, but not limited to, research and development, utilities, payroll, insurances, marketing, etc., etc. Now, the operating margin is pretty much the operating profit represented as a percentage of the total net sales. So the operating margin pretty much tells you how much the company takes in profit for every dollar earned. So you may be asking yourself, okay, so how is this useful? Well, here's some use cases here. So this gives the investor a better understanding of where the income is generated from. Is it either from its core operations or is it from investments? Knowing the operating margin also gives you a better understanding of how well the company manages its expenses. So by analyzing a company's operating margins over several different accounting periods gives you a good indication of whether the company's profitability is increasing or decreasing. All right, quick example. So company X sells phones for $1,000. Now let's say they made a total of one phone in 1 year. So that's a total net sales of $1,000. Now let's say the cost of sales is $400. That gives a gross profit of $600. Now let's say that their operating expenses is another $400 because they got to do their research and development. They got to market the product. They got to do all sorts of things for this operation to work. So that's another $400. Now that leaves the operating profit of $200. Now that's because you subtract $600 from the gross profit minus the $400 of operating expenses, and that gives you $200. This means that their operating margin is 20%. So for every dollar earned, the company keeps 20 cents. So you derive these numbers by funneling down through the income statement. Starting from the net sales, subtracting the cost of goods sold, which gives you gross profit, and then you subtract the operating expenses, which now gives you the operating profit. If you haven't already, check out the gross profit margin video that I put up there. And while you're at it, check out the income statement video so you get a better understanding of all the different items that come with all these sections. Now let's look at a practical example. Let's jump into the computer, take a look at actually Tesla's income statement, and then we'll generate the operation margins from there. All right, everybody. So I have this spreadsheet open with Tesla's income information from several different accounting periods. And what we're going to see here is we're going to try to determine whether Tesla's profitability has increased or decreased over the years. So pretty much what I did, I went through the SEC Edgar database. I took a look at all their 10 case filings and went through the income statement and took all the information from there. If you haven't checked out the Edgar database video that I have here, go ahead and check that out in the cards. It's a super important tool to know. So I have the income information from 2016 up to the trailing 12-month period. But before we begin, we have to go over the actual formula to find the operating margin. So the operating margin is simply the operating income divided by the total revenue. Now let's break this down further. So what is operating income? Well, the operating income is simply the gross profit minus the operating expenses. Now what is gross profit? Well, the gross profit is total revenue minus the cost of revenue. So see, it's like a funnel. It goes down from total revenue, then you subtract the cost of revenue, which gives you the gross profit. And then from the gross profit, you subtract the operating expenses. That gives you the total operating income. Let's do the calculations and see whether or not Tesla has been increasing their profitability over the years. All right, so let's calculate the operating margin the long way so that we get a better understanding of this formula. So to do this, all you have to do is press equals. We're going to do some parentheses so that we can divide each of the sections of the formula. So parentheses, and what we're going to do is we're going to start from the total revenue. We're going to subtract the cost of revenue, which gives you the total gross profit, and close the parentheses. And now what we're going to do is we're going to subtract the operating expenses. Now this essentially gives you the operating income. Now what we're going to do is we're going to close that and we're going to divide that by the total revenue. And that, my friends, will give you the operating margin. So you can see that there's a negative operating margin in 2016 for Tesla. Now let's copy this formula over to the other accounting periods. So to do that, I'm gonna grab the quarter and I'm just gonna drag along, and that should give the relative column and row. All right, so starting from right to left, because that's how financial statements work. In 2016, we can see that there is a negative 9% in operating margin. Going to 2017, there's a negative 13.8. And then something surprising happens in 2018 where there's actually a negative 1.18% operating margin, which means that they're actually increasing their profitability. Even though they're on the negatives, they're increasing. Then we go into 2019 and we actually have a positive number of 0.33% in their operating margins, which is incredible. And we go to the trailing 12 months period and we have 6.27% operating margin. That's profitability. And this is the type of analysis that you can do and you can use for operating margins. Now, there are other use cases that you can use operating margins. Now, my partner Carlos is actually working on a case study that compares two different companies' operating margins. Now, keep in mind, when you do these kinds of comparisons, you must only compare those companies that are in the same sector, same industry. So sign up at deepdatainvesting.com so you can actually take a look at this case study. Well, that's it for this one. Thank you guys so much for watching. I really appreciate all the comments down below that you guys have been leaving, all the messages on our Instagram and Twitter, getting all the support from our investing community. It means the whole entire world to us. Make sure to check out all our socials. I'll link them down below. And of course, go to deepdatainvesting.com, sign up there. All right, you guys have a good one. We'll see you guys later.